I want to show you some of the setup that I am currently taking. When you look at my trades, I do not just give you the trade idea. I tell you exactly where I'm placing my stop loss, where I'm placing my take profit, and what informed my trading decision. We are going to do all that in this video. You have to trade responsibly, and whatever you choose to do with this, you have to understand the nature of forex trading. There are no guarantees. You can take the trades and see what is going to happen. If you're new to this channel, I want you to click on the subscribe button and be a part of the community. Here we share forex education content, both technical analysis, fundamental analysis, and trading tools. All these things can help you to become a better trader. If you check the description of this video, you will also find a link to the free WhatsApp channel. There we share some of our swing trades when we are taking. You want to get information related to the Weldds Forex Academy, it is also there that you get that information. I usually begin my analysis with the fundamentals. I don't just trade technical analysis all the time. And as you can see on my screen, you see GDP, you see inflation data, you see interest rate, and you see all that. When I looked at all these data based on fundamentals, I am seeing that the US dollar is the strongest currency so far. If you consider all the fundamental rating, the US dollar is strong. The weakest currency is the Canadian dollar fundamentally. Then you have Australia dollar following the US dollar, and then United Kingdom, the pound is also strong. But one thing you need to observe in this rating is that there are times that the difference between the strongest currency and the weakest currency used to be very wide. Sometimes you can see like 10 here and around 80 there. But the rating for all the currencies, the difference between them is not much. And based on this, you expect that most of the markets will be ranging. Because if you look at the US dollar against the Australian dollar, the difference is not much. The difference between the Australian dollar to the British pound is not much. We like to trade divergence. When you look at one currency that is very strong fundamentally compared to the weakest currency, you are going to know that that currency pair is going to trend. But here we are seeing a situation where we will be seeing a lot of ranging markets. Okay, so that is that about the fundamentals. Today is not a fundamental class. Then another point which I encourage people to also do is that you need to look at the risk sentiment. For the past 2 weeks, the rating on my risk off is higher, and based on the risk sentiment, you see that the market is risk off. And when the market is risk off, you expect prices of indices like the US500, US100, you expect US500 to drop. Japanese yen and Swiss franc will be strong during this period of time. I like to compare my fundamentals, the risk sentiment, before going to the charts, and this will give you a kind of idea what you should have on the background, because technicals alone will not give you everything. The forex market sits on 3 legs. You have the sentiment, you have the fundamentals, and you have the technical analysis. Some people think that they can just trade with the technicals. If you are doing that and it's working for you, congratulations. But I think that you have to trade with these 3. And if you are going to approach this market like a professional, you have to think in this 3-dimensional world. Okay, if you look at first currency here is the AUD against US dollar. This is one currency that is very important to me. Last week I traded this currency and it has been fine. I usually start my analysis from the weekly time frame. If you look at the weekly time frame, you can see that this currency has been ranging. It's on a range. These are not the times when you should be taking swing trades that are going to be there for weeks, because the general situation of the market is ranging. So you take your trades, calculate your risks, maybe risk reward ratio of 3, close that one and wait for the next setup, and you trade that way. If you're going to trade in one direction and keep your trade for a very long time, it might not work very well for you, because if you look at central bank actions, this period is a period when the central bank is cutting rates. So looking at the Australian dollar on the weekly time frame, you see that we are trading from the upper part of that range to the bottom. If you go to the daily time frame, this is a trade that we already started. So look at the daily time frame. When the market got to that
resistance level. There were many signs for you to observe. 4 hours will be clearer to you. You can see something like head and shoulder pattern that formed around this point, telling you that the market is about to change direction. Remember, from the weekly time frame, we have seen that this market is in a range, and the formation of this head and shoulder pattern signal to us that the next movement to the support level is about to begin, and that was where we traded last week. But to show you the entry, okay, so the first signal we took last week was this. We traded from this level. If you use the Fibonacci retracement, the entry was at the 61.8 fib level, which is exactly at this point. That was our entry point. For day traders, I encourage day traders, once the market has turned at the 61.8 fib level, you can go down to the 15 minutes time frame and look for a better entry for you, so that the distance to your stop loss will be small. So that trade was one of the trade we took last week, and I think this trade is going to continue. When we entered there, we targeted this level first of all, this place as take profit 1, because I do not like when people just go and react to news. Okay, so this was the first trade. After this formation, we just aimed for risk reward ratio of around 3 on that first trade. Then later the market gave us another entry, which is from this point. The new trade was from here. If you move this into this point, the second trade was at the 61.8 fib level. For people that have been trading with me for some time, they know that I have 2 areas I like to enter the market using the Fibonacci retracement. I like to enter at the 61.8 fib level or the 78.6 fib level. After the NFP, that's why people should not just be jumping to NFP. You see that NFP just gave a little spike here, but the overall flow of the market is going to respect the fundamentals and the technical that we have observed. The market came to the 61.8 after NFP, and that was the trade I took for NFP. I did not react to NFP because after analyzing my market, the pending order will be there waiting. Okay, and that trade happened on Friday. So for people that are on this call, I think on this trade we still have opportunity. Remember, our destination is still far. We are still coming down towards this area, so you still have an opportunity to take this trade in the coming week. I think from this level we are going to measure to this point. I'm expecting a retracement back towards the 61.8 fib level or the 78 point something fib level for the next entry. Another thing you need to note is that you just observe this. There might be another movement down before that major retracement. If that happens, you will extend the Fibonacci retracement to accommodate for that and wait for the pullback to the 61.8 fib level. This is a potential entry. Okay, but if the market continues to move from here back, then my entry zone, I'm going to have a pending order at this exact level. And depending on what you are going to do, you can decide to keep your stop loss a little bit away from there and target a risk reward ratio of 3 at most. 3 points is okay. If you are going to enter with an instant execution, you have to wait for the market to get to the 61.8 fib level, and when it is turning, you go to a lower time frame. And if you do that, you are going to have a smaller stop loss. That is the way that I'm going to trade this AUD US dollar.
If you come to the Weldds Forex Academy, we take you deep dive into fundamental analysis, what truly moves the market. We're not just telling you about news trading and all those kind of news. You have to dig deep into fundamentals and know what truly moves the market. We also take you through technical analysis, market sentiment, and risk management. Everything you need to be a full trader. Okay, so if you want to join the Weldds Forex Academy, check the description of this video. There is a link to a WhatsApp. Chat us today that you want to join the Weldds Forex Academy, and we will be glad to admit you. See you there.
The next currency that I think we need to look at is GBPJPY. If you look at the weekly time frame, remember the market is risk off. You can see that this trend was bullish for some time. It is very clear now that we are selling this particular currency pair. We still have an opportunity to trade from here back to this level first. And if it breaks this level, we are going down also. Okay, so if you come down to 4-hour time frame, you can see that the market broke this level and then gave this bearish engulfing candle. So come to the 1 hour time frame. If you want to take this trade, this is where you should wait for an entry. Remember, in trading, it is not the best analysis that makes the money, but proper risk management. For next week, this is another trade that I'm going to wait for at the 61.8 fib level, which is at this level. Then stop loss for this trade is going to be a little bit away from there. Then we target this level. If you have a risk reward ratio of 1:1 at break even, you close 50% of your position. Then keep the other one for a risk reward ratio of 3 or 4 or 5, depending on how the momentum will be next week. For people that trade gold, for gold, if you go to the weekly time frame, you can see that the overall trend for gold is bullish. For the past 3 weeks, gold has been in a range. So if you are a swing trader, a long-term trader, the overall movement of this particular pair is bullish. But if you come to the daily time frame and observe, there is a strict range on the daily and 4 hour time frame. So this pair for days now has been ranging, in fact, for nearly 2 to 3 weeks. Whatever you are doing with gold, you need to bear in mind that this is what is going on. Because of the strength of the US dollar, this range is going to continue for some time. If you are going to take a swing position on gold, wait for it to break out of that. If not, you can just be playing with this range. Okay, so let's check the 1 hour time frame for an entry. If I'm going to do anything with gold, I'll wait for it to trade back to this zone, and if I see a good setup there, I can trade it back somewhere there. For people that are trading gold, you don't play with your stop loss. If you have done your calculation, make sure you don't joke with your stop loss and all that. Remember, these things are not yet signals, they are trade plans. It only becomes a signal when the market comes to that level and gives you a trade. You can wait for gold around this area or around here. If you go to your 15 minutes time frame, you can see a very nice entry and a small stop loss for you. So those are some of the trades that I'm going to take. For AUDCHF, if you check on the weekly time frame, you can see what is going on there. We'll be selling that currency back to this trend line. On the weekly time frame, you can see after it broke out of this range, came back, retested, we are selling. Last week we did the analysis. It was a sell for us. We waited for this currency here. There are people that enter the trade at the 50% fib level. If you are the person that like the 50% fib level, you would have taken this sell. But personally, I like it to settle at the 61.8 fib level. The market tapped the 61.8 fib level. But let's see what this trade might do in the new week. The entry was at this level, exact level. This was 61.8 fib level. But I'm just regretting that I did not set a pending order there. It got exactly to the 61.8 fib level and started dropping. And because the overall situation of the market is risk off, you should expect that Switzerland is going to be strong. There was another setup here. After the change of structure here, the market went up there, came back, created a new high. After this break, it was another good place to take the trade here. Okay, but for someone that has missed, you can still wait for this trade. Maybe here, maybe, just maybe, you can still wait for the trade here. And if I'm going to take this trade next week, I won't just set a pending order on this trade. I'll wait for the trade to come there and I will look for candlestick confirmation. If I see that, I'm going to execute the trade. Then the stop loss will be a little bit above there. You can now target a risk reward ratio of 3 minimum. So that is what I would do on this particular currency pair. For people that are trading indices like S&P 500, if you were going to trade this currency pair last week and based on your risk sentiment, you have known that the market is risk off, you are expecting to sell this currency pair and you know that there was a range. So when the market got here, you are seeing several signs. There is something like head and shoulder pattern here. If you take this thing here, when the market got here on the 1 hour time frame, I don't like to exceed the 1 hour time frame. Sometimes if you go to the 15 minutes time frame, you might be going to noise. But on the 1 hour time frame, when this market has gotten here, you see that this is a head and shoulder pattern. And another thing is that this was a clear bearish engulfing candle and it broke this neckline. So this was a very valid entry. without wasting time, this would have been a very good entry. What we observed with currencies, you see that even indices was doing the same thing. If you check US, even without checking, if you check something like US100, it should do the same thing. You see what US500, US100 did here. And this trade, by next week, we can have another entry here. We can have another entry for US100. I don't know who is trading US100. This trade, I'll be waiting for it here for some other confirmation before taking the trade. And if you check US30, it's going to be the same thing, because the entire situation of the market is risk off. You should expect this same thing to form everywhere you turn. Everywhere you turn. Look at this neckline broke here, which gave us a good trade setup. You can wait for a pullback towards that zone before the next bearish action.